All right. Hello. Good evening, ladies and gentlemen. All right. Welcome to our portfolio $2,000 cash flow live, all right, over Facebook with I'm Possible Terence. All right. Now, I'm coming back to you after the start of the Chinese New Year. All right. It is still ongoing. All right. I'm pretty sure many of you, all right, will have more celebrations, all right, and more food parties, all right, this weekend. All right, but before we do that, let's make sure we load our portfolio for more cash flow. Okay. All right, now, so if you're joining me right now, can you just drop a comment, say hello, say hi in the chat box, all right, or the comment box, so I know who's joining us for tonight's session. All right, and also please pay attention to the banner that you see on the screen. All right, because the banner says, all right, if you're joining us for the first time, please go to this website, streamyard.com/Facebook. All right, and then you'll see a Facebook button over there. All right, click on the button so that your profile on Facebook will be approved. All right, and when you leave comments, this is not what I'll be seeing. All right, so Facebook user, all right, you're the first to leave a comment, but this is what I see over here. All right, okay, and Katie, all right, Happy New Year and 恭喜发财 to you. All right, hello, David. All right, hello, Eileen, and of course, all right, many others of you over here. All right, hello, EL as well. All right, great to have all of you coming back over and over again. Now, so for the rest of you, all right, just read the banner one more time. Go to streamyard.com/Facebook, click on the Facebook button, all right, okay, and I'll be able to see your profile, all right, and we can get the session ongoing, okay? Now, so for starters, all right, let me also go through, all right, some of the key points, all right, of this Facebook live session that I have been running, all right, for over a year right now, all right, trading a live portfolio in front of all your very eyes, all right? Now, so inside this portfolio, all right, it is meant for the education of the general public, all right, and what I hope to achieve is the fact, all right, that any of you out there, all right, any of you out there can simply build a portfolio, all right, sticking to a very, very simple basket of stocks with strong fundamentals, all right, and achieve a return of anywhere above 20%, all right, per annum and above. All right, so many of you who have joined me over the last, I think this is coming to the 11th month right now, all right, you would have noticed, all right, that we have done this, right, in a very, very consistent manner. Yeah, okay, I've not taken a lot of times, all right, okay, to manage this portfolio. And in fact, we only manage it, all right, during our Friday live sessions, all right, and during weeks where there's a schedule clash, right, many of you have seen that I don't even post out any information most of the time. All right, so it's a pretty laid back portfolio, all right, but yet, all right, we have been able to hit our profit target or our cash flow target of $2,000, right, month after month for the last 10 months in a row right now. Right, so for those of you who are joining us new, right, you will be wondering, Terence, what's the size of this portfolio? All right, the size of this portfolio that I'm building with all of you, all right, is worth $100,000. All right, when we start. Yeah, okay. All right, now how do I do this? All right, there's only one approach that I adopt. All right, and that's called selling portfolio puts. Now, some of you have a big question mark again. Terence, what do you mean by portfolio puts? You have to understand, right, that every mentor, right, will have their own books. All right, which means, all right, they will trade a particular strategy, but they will amend it, right, to what suits them. All right, so for me, all right, what suits me is what I call selling portfolio puts. Now, you may be wondering, Terence, how is it done? All right, so let me quickly explain to all of you who are joining us new. All right, now, so portfolio puts is actually the same as selling, right, naked puts or selling cash secured puts. Yeah, okay, now, so the term of selling cash secured puts is basically selling put options to generate cash flow, right, and having the full cash amount ready, right, to pick up and own any of these stocks if you ever need to. Right, so what it means is instead of buying the stock up front, right, you're just selling the put options, but you are ready, right, to buy those stocks, right, if it is forced or exercised upon you. Yeah, okay, so the aim of this portfolio is simply to generate cash flow. Right, my main goal is not to own any of these stocks, right, and that's why I'm selling the put options. Yeah, I want to hit a cash flow target, right, of $2,000 every month, all right, and I start off by selling portfolio puts. But you must understand that the stock market, right, is not within my control. It's not within your control as well. We can never control this stock market, right? It controls us, right? So I need to be prepared for anything that Mr. Stock Market can throw at me. Right now, so I don't like the idea of putting up too much cash, because just like buying property, right, buying all my properties, right, with all cash doesn't make sense at all. Right, buying properties with too much leverage is too dangerous as well. right? But if you can do it just right, you can actually maximize your returns, right? And adopt the same safety measures, right, of your capital as well, right? So that's where I come up with portfolio puts. All right, now, so portfolio puts are simply positions where I'm still in portfolio puts right here, right? So all these positions that you're seeing, all right, the allocation of deposits or margins that I'm putting aside is 70%, right, of the cost of owning those shares. Right? I don't need to own it now, right? The broker only wants 20%, but that's too much leverage. That's too dangerous. I'm actually setting aside 70%, right, from the very beginning when I take such trades. Right? But you will be wondering, Terence, what if you end up getting exercise and you have to own those stocks? As you see over here, I do own 5 stock positions in my portfolio right now, right? And once they become stocks, right, I will reallocate, right, and count them as a full 100% exposure. All right, now, so before they become stocks, all right, I only allocate 70%, right? But once any of these positions become an actual stock itself, right, I will readjust my allocation and give it 100% exposure. So I will own all my stocks in full cash, right, without any leverage. Yeah, okay, so this is how I manage my portfolio, and it has helped me to achieve, right, my targets year after year after year, all right, without facing too much danger. Okay, now, so in a nutshell, right, this is what I do, and I've been doing this for a year over here, all right, and I've been running. All right, now, so Andy, all right, so Andy is basically saying, all right, Terence, I'm unable to view. All right, can the rest of you verify that? All right, okay, are you seeing my screen just fine? All right, Andy, you're fine. Yeah, Andy, this week I'm seeing you fine. All right, thank you very much for going to the website. Yeah, all right, but I do have a Facebook user over here. All right, and I have no idea who you are. All right, I have another one over here. Yeah. Okay, all right. Thank you very much, Susan. All right, so Susan is saying that you can see me on the screen, so I'm all good, yeah? Okay, now, so I'm going to take off the banner right now. Oops, wrong banner. Okay, now, so before I start talking about my perceptions of the market, right, before I talk about the trades that I'm looking at adding to the portfolio for cash today, okay, I want to first put up the disclaimer. All right, now, I am trading my own live portfolios over here. Right, I am taking real life trades, right? But these are not meant to be any form of recommendations at all, right? They are done, right, just from a purpose of sharing, right, and from an educational angle, right? So before you take any trades on your own accounts, please be aware that all forms of investment bears a risk of loss. So you do need to do your own due diligence, right, and be aware of all the risk involved, right, before deciding to follow any of these things that I'm about to share with you, okay? All right, now, so ladies and gentlemen, all right, let's go. Okay, all right, now, so before I go over here, all right, I need your help. All right, okay, let's keep this session going on. Okay, all right, let's at least bring it to a closure, all right, on a full year together. All right, okay, so I need you to be generous. Hit the like button, hit the share button right now. Can you do that for me, please? All right, so hit the like button, hit the share button. I realize when I ask for this at the end, it doesn't work. All right, so I'm going to start asking it from the very beginning right now. Yeah. Okay, awesome. All right, now, so EL, all right, so you're asking over here, all right, I'm just wondering what if the stocks that you picked up never returns to your purchase prices? What is your exit plans? Now, I can tell you, EL, all right, that I very carefully trade, all right, only a basket or a handful of stocks, all right, from a basket that I formed myself, all right, from trading since 10 years ago. All right, and all these stocks bear a similar characteristic where I am sure, and when I actually know, right, that they will actually go back and their prices will always bounce back. All right, and you have seen this, right, over the last 10 months together with me, yeah? All right, I very carefully pick my stocks, right, but I'm not saying it's full 100%. All right, okay, there is a 1% chance, right, that every now and then there will be one blue chip stock that falls from grace. Right, I can't stop that from happening, and it does happen. All right, and when that happens, all right, okay, I will actually take my losses. Right, when that fundamental characteristic is changed, right, it waves a warning flag to me, right, and irregardless of the prices, all right, I'm going to cut my losses, I'm going to get out, and I'm going to look to recover, right, from my other trades after that, right? But of course, thankfully, right, in the last one over year, right, together live, it has never happened. Yeah, all right, so this shows you, right, how random and how seldom, right, it happens to the basket of stocks I'm trading with, right, and that's where, all right, your familiarity, right, with the stocks that you trade becomes very important. right? Look, many traders love to trade all the red hot stocks, right? Or the upcoming stocks without knowing too much of these companies to begin with, right? And that's never a good measure, right? If you know exactly what companies you're trading, right, and you're familiar about their behaviors, right? You know when the down cycle comes, you know when an up cycle comes, how these stocks will fare, right? Then you can actually trade or make your trades very confidently, right? Just like you see on the screen right now. I've been holding on to my WBA shares, right, since May, right? But I'm still comfortable. Am I still under the water? I am. Yeah, okay. But have the stock come back? It has. Not nearly for me to break even, but it has come back. And you must understand as well, I've been happily collecting my dividends, right, while waiting for this stock to recover. And occasionally, I've been able to collect more cash flow from selling call options, right, while owning these stocks as well. All right, so that's fine. All right, now, so many people, many people have this idea. Hey, Terence, I don't have a target for my portfolio. I just want to make as much money as I can. All right, now, while that's, a very, very fancy goal, right, but it doesn't help you. Right now, why do I say it doesn't help you? Because when you don't have a target, right, you're never going to be satisfied, right? And you don't know when to stop, right? And when I say knowing when to stop, it is also about risk management, right? So if I'm very clear that all I want is $2,000, right? Once I've achieved that $2,000 cash flow goal, right, will I continue to trade more and generate more cash flow? The answer is yes. But then every trade after the $2,000 mark, right, will be very scrutinized, right? They will be taken with extreme care, right, while adding those additional portfolios. So can you see where I'm coming from, Yao? Yeah, all right. Okay, so basically, I'll hope to address that over here. All right. Okay, now, so Intel. What's wrong with Intel? It's not damaged. It's not enjoying the best times, but it's not damaged, right? And in fact, if I don't have a position right now, I'll tell you this: I'll continue selling. Why? Because is it the first time it has gone to 27.50? No, it has gone all the way to 25, All right, and can you see that? Right, their results are not terrible. All right, now why do I say not terrible? Did you realize we traded Gap as well? Did you realize we traded Abercrombie and Fitch? Right, these companies actually had a losing quarter. They actually had a quarter that they lost money, but Intel didn't. Intel reported a profit, right? Just that it wasn't very, very spectacular. Yeah, do we agree? All right, now, so it is not the best when it comes to Intel, right? Because it's a benchmark, right? But it's still generating profits. And chips are at the worst of their times. So if a company at the worst of their business cycle, right, can still do it, then will they survive? Think about it. Yeah. All right. Okay. And not just that, right? Not just that. All right. Have you remembered, right, that this company that we traded now, right? It's always about the fundamental metrics, right? Why? Okay. I'm not too sure what's happening, but my charts are loading a little bit slow today. Okay. Right. But if you look at Dow, right, can you see that Dow's earnings is actually terrible? They missed their estimates, right? But yet, look at where the stock is going. So you may be asking, Terence, why is this happening? I don't have an answer for you, but all I can tell you is this, right? Because this stock is cheap. That's it. All right. Now you must understand, Wall Street trades in future expectations, not what they see now. So if Intel reports a bad profit now, all right, okay, but as long as the future looks brighter, right, the stock will bounce very quickly, all right, as you see with Dow over here. Can you see that? All right, so we had it go from 42 all the way to 58. That's $16, right? $16 from October, right? Can this happen to Intel? I'm telling you, it can. Why? Because it's done it many times, all right? It's done it many times, all right? So let me try to show you this again, all right? If I take you to Intel, no, I need to take you to. There you go. All right, there you go, Yale. All right, it's a boom and bust cycle for Intel. Doesn't matter. All right, why? Because I will only trade my put options when Intel is low. Remember that? All right, I don't sell my put options here. All right, sell it only when they're low. All right, so after hitting a low, do they bounce back? That's it. Yeah, all right. I'm not hitting a home run. I'm just, trying to catch a bounce. That's it. Yeah. Okay. All right. Now, so, Andy, simple, because Intel is the benchmark. So if the benchmark, all right, is refusing to recover, then it just takes longer. That's it. All right. So certain companies, right, take longer, right, for their prices to recover as compared to the others. And you must understand Intel's market cap, right, is probably much larger than Himax or much larger than Micron. Right. So it will take a lot more funds, right, to want to buy and hold Intel before the prices will go up. Right. And something I want to, something I just want to point to all of your attention. You can panic as much as you want, right? Yeah, for example, right, if you're worried about Intel, all right, cut your losses. But I promise you this, if you give it another 6 months and you come back and take a look, you're going to regret the decision of cutting your losses right now. I've told my students many times, you want to cut your loss, don't cut it, all right, when a fundamentally strong company is hitting a new bottom. Don't ever do that. That's the worst decision you can make. Right, so even if you want to cut your losses, wait for a bounce and then get out. That's what I can tell you. For me, I'm going to stay. All right, why? All right, number one, all right, the current ratio of Intel, does it seem like it's having a cash flow trouble? No. The business is not in the best of times, but are they running into any cash flow trouble? No. All right, have Intel been in such a cycle before? They have. All right, are they still the giant in terms of their business sector? They are. So why do I want to worry about these kind of little things that you are bringing up that I cannot control? You realize that? I can't control what you're talking about, but what I can control is seeing the numbers, right? And the numbers will not lie to me. So I trade with the numbers I'm seeing. Yeah. All right. Okay. Now, so Facebook user, do I think it's a good time to buy Intel? No. I think it's a good time to trade Intel. All right. Now, why do I say this? Because we are in a bearish market. Right? And when you're in a bearish market, the upsides are always limited. Yeah. Okay. Now, so when I say trade, it means when you have a strong fundamental company that is pressed down, right, it's the time to take a trade on it. And once it bounces, you get out and you wait for it to come back again. All right. So that's how you want to trade it over here. All right. So together with our students over here, we've been in, out, right, catching many of these stocks and their bounces over here, right, and then trying to capitalize on it. All right. But for this portfolio, I've been stuck with the stock, so be it, right? Why? Right? Because, right, I'm fine as long as, if you notice, right, Intel's pays about 36.5 cents every quarter. So for a year, right, I'm entitled to what? 4, 8, 12, 16, about $1.50 from dividends. There's $1.50 from dividends. All right, am I okay with that? I think it's okay. Yeah. All right. Now, so how long have I been holding the stock? Since June. Right, so since June over here, we'll make it. Oh man, yeah, this is this June. All right, so last June. So there'll be 7 months. So I would have collected well over 70 cents. All right, from dividends that Intel has paid. So I'm fine with that. Yeah. Okay. All right. Now, so Andy. All right, so Andy is making comments saying that he's trading and making a lot of profits from Himax over here. All right, average down when it's 550. You want to average it down on Intel. I'll leave it to you, okay? All right, Andy. All right, but I would say, and I'll say it once again, when you trade Himax, all right, be careful. All right, there's a reason why I stopped trading it in my portfolio. All right, if you insist on going ahead with it, I cannot stop you. All right, but always do your own due diligence, okay? All right, make sure you're always comfortable, all right, with the stocks, that you choose to sell portfolio puts on. All right, that's the key to number one over here. All right, so is it a good time to sell call options on assigned stocks like Intel? All right, Susan, remember we go through this almost every week. All right, so why is there a call option on Verizon? Why is there a call option on HBI? But why isn't there one on WBA or on Intel? Remember we did this just last Friday? All right, it's not about what you want to do, right? But it's whether it's fruitful for you to do it on the stock and where the stock price is at the current moment. Right? So many traders fail because they just trade as long as what they feel. And that's not correct. You need to trade what the stock or what the picture and what the fundamentals is showing you and telling you. When you can start picking up those clues, right, you will start instantly becoming a better trader. So if you're saying, Terence, I don't know how to do that, then you need to consider coming up to one of our mentorship programs, right, where we trade live every single week with all our students and our trading members, and we drill this point, right, back into your minds week after week after week with every trade that we take. Yeah. All right. Now, so Facebook user, again, I would say this, right? You will need to go to the website, streamyard.com/Facebook, right? Click on the button to approve your profile, so I know who's leaving this comment, right, before I actually reply to it. All right. So just to be fair over here, right, I want to know who I'm replying to. Right. Okay. Now, so I'm running these sessions for the public for the benefit of all of you. Right. So all I'm asking back is to be able to reply, right, and knowing who you are. Okay. So please go ahead and do so. All right. And also to this question. Okay. Another Facebook user. All right. Now, so I've addressed some questions before I started. All right. And now I think it's a good time, all right, for us to go see the markets. Yeah. All right. Now, so let's check out SPY. All right, ladies and gentlemen, this is the SPY chart over here, right? That we've been looking week after week after week, right? And what do we see now? We see it on the breakout again, all right? So the SPY is challenging and breaking out from the 200-day moving average once again, right? But the question is it going to break past this resistance over here? All right, so this resistance is about 406, all right? But to be accurate, all right, I can always readjust it, right, to this peak over here, which makes it 410. Yeah. All right. Okay. So this right here is about 410. Yeah. Okay. 410, which makes it 4,100, right, on the S&P 500. And that's the barrier. Do you realize it's such a nice whole number? All right. So if the funds continue to push this market higher, all right, okay, we have another 50 points upside to go. All right. Okay. But okay, if it fails, all right, okay, if it fails, all right, we have the downside all the way to 3,850. All right, so we have a 200-point downside versus a 50-point upside over here. All right, now, so weigh your pros and cons. Why? All right, because if you believe all the news that is going out there, oh, interest rate is going to get cut. Yeah, is the inflation still at 6%? All right, and the target of the Fed still at 3% or 2%? All right, so if we are this far, do you think they'll even cut the interest rates and bring inflation back? Are you crazy? All right, that's not even in the picture. It's not even possible. So can you see that? All right, do not believe the mainstream media and what they're pushing out, because right, the mainstream media is meant, right, to always and constantly hype up the market. All right, they want people to get their money into the markets. All right, so whatever news that they can spin, all right, okay, they're going to try to spin a positive angle to it. All right. Okay. So don't buy into it. All right. You look at this. All right. They say inflation comes down. Oh, from 7% is down to 6%. Oh, that's good news. All right. Go buy. Is it really that good to buy? All right. Are we done with inflation? No. So if we're not done with inflation, what does it mean? It means that things are still expensive. All right. It means that cost of borrowing is still going to be high. All right. Are companies going to continue taking loans? No. So if they're not taking loans, then all right, what's going to happen? Right? And do you just read the news as well? Recently, Walmart came out and announced that they are going to increase their wages, right, for their employees. What does this mean? Cost of running business is more expensive now. So how is it going to affect their profitability? Think about it. Yeah. All right. Now, so many companies are facing the brunt right now because all their cost of running business is getting more expensive. And just how long can they pass on this cost to the consumers? There's only this much that all of us can withstand, right, before we cut our pockets and go for alternatives. Can you see that now? Yeah, all right. Now, so you need to be very careful and selective with every single trade, right, that you're putting your money on right there. Okay, so remember this. If you are a long side trader or buyer, right, only buy strong fundamentals that have been absolutely beaten, right, to the ground. Okay, all right. If you're a short side trader, then you want to look for companies that have not produced any profits at all right, but are running to extreme feverish, all right, valuations. All right, so these are your trades that you want to look at. Or defensive stocks, they have overran themselves and the valuation doesn't make any sense at all. All right, okay, so some golden nuggets from me over here. All right, so now let's go to our portfolio and let's see what we can add, all right, for today, okay? All right, now, so ladies and gentlemen, all right, let's go to our portfolio. right, our first trade over here is WBA. We hold the stock at $45. So just like Susan is asking, all right, Terence, can we add any, call options to these trades? All right, so let's look at WBA. All right, so Susan, having a look at WBA, all right, what do you think? So this stock has been punished, all right? It hit a high of 42, and now it's back down to 37. Do you think, right, that this stock has a higher chance of bouncing back up, or it has a higher chance of going lower? All right, because we have a positive divergence over here. Can you see that? A low, all right, another near low over here, but the positivity of the indicators. So if you deem that the chance of it bouncing up, right, is higher, all right, let's look at the earnings. Right, 7.80 cents versus 118. Is earnings improving? Earnings is improving. So if earnings is improving, where do you expect the stock price to go? Higher. So if it's going higher, do you really want to sell a call option now? Because you can't sell a 45 call option, which means, right, any strike that you sell brings you brings you a possibility, all right, of losing your stock with a loss amount. Do you want to do that? Doesn't sound clever, right? Just for a little bit of cash flow, you may end up taking a loss on your stock. No. So why do you want to do it? Doesn't make sense. Okay, Susan, do you get the point over there? All right, I hope I've solved your question about asking. Yes, I know it's underwater, right? But even when it's underwater, even when you're looking at paper losses, you have to act smart. Yeah, okay, don't do just what you feel like doing, right? Do it because it makes sense. Yeah. Okay, now, so no call options on WBA. All right, and Intel is down today, so no call options as well. All right, okay, so earnings have disappointed, so we're not going to touch Intel. All right, how about Verizon? All right, we have a 42 call option which expires on next Friday. Let's check in on that. Seems like it's doing fine. All right, and our decision was correct. All right, so we said that, hey, valuations are a little bit high. All right, okay, we should capitalize on it. All right, and we are right. Yeah, okay, we are right. Right now, so the stock cost us $50, so we're still underwater. All right, so we're still recovering. All right, at this moment. All right, next, Tyson Food. All right, we hold the stock at $77.50. All right, what is it worth now? 65. All right, so it's at 65. All right, earnings is coming up. All right, it's in the middle of nowhere. All right, so no, I'm not going to add any calls as well. All right, HBI. So I have 400 shares of HBI that cost me $9. Nice. All right. It's sitting around going nowhere. All right. So, it was a right decision, right, to sell and collect a little bit of cash flow, all right, while owning the stock. So that's a good trade. All right. Now, next trade over here, PFE. All right. We have a 47.50 put option, all right, that expires on 17th of Feb. All right. So PFE. All right. I'm going to move it up. Okay. All right, now, so PFE. All right, so PFE has been sliding down. All right, it's still not recovering. All right, but at least right now, can you see that, the indicators, the RSI is severely oversold? All right, so that provides us a sign, all right, that we may be seeing a bounce soon. All right, but even if we don't get a bounce, does it matter? No, it doesn't. It doesn't matter at all. Okay, let me explain to you why. All right, because Pfizer trades at 8.5 times PE ratio. All right, okay, they are a money-making company, right? Especially with all the vaccines that are still going on, they have a huge cash flow, all right? And on top of that, the whole range of medicine that they're selling, all right, it's a cash flow business. So I'm not worried at all. Yeah. All right, so I'm holding on to this stock in this position right now. Okay, all right, now our next position over here, all right, Coles. All right, we have a $30 put option, all right, that expires on 17th of Feb. All right, awesome. This is a good trade, a good position over here. All right, okay, now, so we're going to hang on to this. All right, okay, there's about another 3 more weeks to go. All right, and there's still quite a bit of cash flow, so I'm going to hang on to it. It's worth about 70 cents. Yeah, all right, so we've collected half the premiums, and I want to continue holding on. Now, our next trade over here, AT&T, right, 18 puts, right, and AT&T is at 20. All right, awesome. All right, now, so see, all right, many of you have been joining me week after week, right? Okay, now, and as long as many of these stocks, right, are going nowhere, all right, we can actually just continue to trade these stocks, right, and continue to generate and collect our cash flows, right? So for AT&T, we have what, $18 puts, right? We can close it right now for 4 cents. Maybe I should do it, all right? Okay, because we've already collected the bulk of it, all right? So let's go ahead and do it, shall we? All right, now, so I'm going to close this position for 4 cents today, all right, and that's going to bring me, all right, to $115 in net cash flow. So let's go ahead and close this. All right, now, so the date today is 27th of January. All right, and that will free up my portfolio. Nice. All right, now, so hang on. Let me go ahead and close my position. All right. So let me just show all of you. All right, I bought back 5 of my AT&T $18 put options for 4 cents. All right, so this is a trade that is just filled over here. The clock on my computer, all right, and the clock over here of the trade is the same. All right, ladies and gentlemen. All right, so this trade is closed. All right, and for this month, I'm still at 1,742. So I'm still requiring, all right, another $250 in cash flow. All right, now, so I have 2 more positions, which is CVS and MDT, which I loaded last week. So I won't be touching them right now. All right, so now that leaves me with some trades that I need to add. All right, now, so I did say that I was looking to add Google last week. But it's obvious that Google didn't come down, so I can't do it right now. Yeah. Nope, this stock has been on a tear as well, so I can't add it right now. Nope, this stock is doing strong as well. Looks like I'm running out. Looks like I'm running out of sources. All right, now give me a minute. Let me try and see. What else do I have? GlaxoSmithKline. Some of you will be asking, Terence, can we trade this? All right, now, because the earnings is so close, all right, it doesn't make sense for me to get into a trade right now. All right, it defeats the purpose. All right, so I'm going to hold on to it. All right, now let's see if we can get some other stocks. Kroger. Kroger's earnings is over. All right, it has been smashed. Let's look at its valuation. 14 isn't exactly very, very cheap. No, it's trading at fair valuation. So no, I don't want to trade this. No. Nope, too close to earnings. Nope. Hang on, Andy. Let me have a look at that soon, okay? Oh man, what's going on? Tupperware. No, Andy, I'm not keen on Tupperware because I don't like the earnings patterns that they're going. All right, and they pay no dividends. So if I'm left holding the stock, there's no benefit for me at all. All right, so I'll rather go with another trade on Nordstrom. All right, okay, still at a 9 PE. Right, it still pays a 4% dividend return. All right, I just want to see if the strike appetizes me. All right, now so let's go. If I take this support, all right, it's going to be about 1650. All right, I can go to 17 right now. So if I sell a 17, all right, I can get 35 cents. So I'm going to do that. Okay, now, so today I'm going to trade Nordstrom. I'm going to take the 17 put options. All right, okay, so I'm going to sell 17 portfolio puts on Nordstrom for February 17. All right, I'm going to sell 5. Yes, I've done it. All right, so JW Nordstrom. All right, okay, I sold 17 put options for 17 Feb. I sold 5 of them for 35 cents. All right, so this trade is done. I sold 5 of them for 35 cents. Yeah. All right. So let's go add that into our portfolio. So that puts in $175. That brings me to 1,917. I'm close enough. All right, I'm not going to force any trades now because the market is basically the market is at the peak. All right, so for me to load up on portfolio puts this week doesn't make sense at all. All right, so I found one. I'm aging close enough. I'm less than $100 away from our cash flow goal, so I'm happy with that. Okay, all right, I'm happy with that position. So I liquidated about $6,000, right, in closing my AT&T puts today. All right, I reallocated the cash flow into JW Nordstrom. So I think that's good enough. All right, just let me quickly have a look at one more. No, this stock has ran too far. So no. All right, that's it. That's all that I'm going to put in my portfolio today. All right, no, Andy, you can go ahead and trade any banks or any financial institutions, but not me. All right, because interest rates are on the up right now. So I'm not going to trade any banks, no matter how big, how low their valuations are. All right, because the economy is not benefiting what the banks and how they make their profits. And if you've not read the news, a lot of these banks are, stopping their, mortgage lending practices. Right? If they're not going to loan money to buy houses, then what does it tell you? all right, a huge department, all right, has just taken a profit cut from the entire banking sector. All right, that tells you they're in trouble. All right, that tells you the market is not good for their profits. All right, so no, I'm not touching any financial related companies for now. All right, my comment on Tesla. Anybody wants to help me out? All right, I'm never ever trading that stock. All right, I'm never ever putting that stock into my portfolio at all. All right, for a very simple reason. All right, yes, it's making money now, but it's still all hype. All right, now why do I say that? Simple. All right, before, all right, it was a story. All right, and you don't know if it's going to be successful or not. All right, whether the company is going to generate a decent profit. It has done that. All right, but you need to ask yourself this question now. Have they already, all right, gotten as big a market share as they can from the entire automotive sector? All right, are there more competitions that are coming in on them right now? All right, now if there are more competitions coming in, what does it mean, all right, for their profit margins? What does it mean for their profitability? All right, now do they have, all right, a new breakthrough product? All right, do they have, all right, a commanding power like what Apple has with their products? If they don't, right, then what they've done right now is they've just completed their entire growth phase, right? And if a company has completed their growth phase and starts going into that stability phase, all right, what kind of valuations should you put on such companies? Yeah, all right. So that's a risk you need to be aware of, right? And for that reason, no, I'm not coming anywhere close to such companies. Yeah, okay. Whether you want to short or not, no, just stay far, far away. All right. Why? Because it's still a company where you can be short squeezed anytime at all. All right. Why? Because it just takes something from Elon itself, right, to move the stock, be it good, be it bad. Yeah, and there's so much bad news right now. All it takes is one good news and you'll be killed. Why do you want to? Why do you need to trade like that? Is there really a need to trade Tesla as a stock? All right, are you really running out of alternatives? See the problem? All right, many people have their eyes fixated, all right, on a stock, maybe because it's made you so much money. All right, but don't do that. Don't do that. Yeah, okay. If there's no sense in any trade at all, right, then you're just gambling. All right, and I've stopped doing that with my stocks a long, long time ago. All right, I've been burned too many times. All right, I made too many mistakes thinking that I can outsmart the market. I've stopped doing that. Yeah. All right. So Janice is asking, hey Terence, how do you source out these stocks where you sell your put options on? All right, and that's where, all right, I mentioned earlier, all right, I have a basket that I trade entirely on my own. All right, okay. Oh, sorry. I have a basket where I built, all right, from my own trading, all right, for over 10 years right now. All right, and my students within my community, all right, gets full access to this basket and also be aware of all the fundamentals behind why these stocks, all right, will keep on working. All right, okay, and that's where we provide them. So, if you're keen to explore further, all right, as an option seller, all right, or, keen to do whatever I'm showing you right now in this public session with a much smaller capital, yeah, okay, all right, then, all right, you might want to explore some of our mentorship programs that are available out there, all right, for you to bring your investments further. Yeah, okay, all right, now, so this is really kind of like an exposing you, right, to all the possibility, all right, and see if this is something that's your cup of tea. All right, okay, now, and if you like it, all right, do contact my team, all right, and find out, what kind of mentorship programs we have available that's upcoming, right, that will suit, all right, your risk appetite and how you want to build and trade your portfolio. All right, why? Because, all right, we do have, all right, a strategy that we call a 2020 portfolio. All right, it does something very similar to what I'm showing you over here. All right, and for the last 4-5 months, I think, all right, that portfolio right now has already achieved a 27% return. Yeah, okay, so you can see it's way over what we're doing over here. All right, and the capital required is anywhere from $5,000 to $10,000. All right, so we are able to do it with a much smaller capital, right, and trade the similar stocks that you're seeing over here, all right, for the same kind of safety, all right, but for much better returns. Yeah, all right, so if that's something you're keen on, all right, okay, do get in touch with my team. All right, let me see if I can help you over here. All right, give me a minute. All right, Janice, hang on. I need to remove your comment first. All right, Janice, can you see the email scrolling at the bottom over here? All right, so just send my team an email, all right, if you want to find out what mentorships programs are available, yeah? All right. Desmond, all right, I'll leave it to you. Okay, Desmond. All right, okay, we have a trade right now, so I'll leave it to you if you're comfortable with Intel and comfortable at what price. Yeah, okay. So as long as you're happy, you're fine. Yeah, okay. And what about TSM? I never liked it. TSM to me, right, it's very similar to Tesla. Why do you need to trade TSM? All right, is there any fundamentals to it? All right, I know the company is doing well. But then, all right, a company that trades at a 14 times PE, paying a 1.85% dividend return. Oops, sorry, wrong. Right, and a chart that looks like this, right, versus what you saw in Intel, right, which is equally big, if not bigger, with a much better dividend return, with a much lower PE ratio. I leave you to choose, Desmond. Right, a market is right at its peak right now. You have 50 points on the upside, 200 points on the downside. If you sell a put option on this stock, if the market doesn't like it, how far can it fall? All right, and if you compare this with Intel, right, even if the market falls from here, how far more can Intel fall? All right, so that's what I've been trying to tell you about. Yeah, okay. All right, now so EL over here. Okay, I'll take ELs as the last question. All right, before we bring this session to a close. Okay, all right, now so oil stocks. All right, when you trade oil stocks, all right, you have to be very, very opportunistic. Why? Because oil itself is very, very volatile. All right, now so EL, just take a look at the stock. I know you're going to tell me, Terence, the valuation is low. I understand that, but you must look at this and tell yourself this. Does this chart look very, very pretty right now? Yeah, what will you say? Does this chart look very pretty to you? All right, based on the stock and what way it is at this moment. Yes, and that's why you should not trade it. Simple. All right, why? Just like TSM that I answered Desmond earlier. All right, if a chart looks so pretty and the market starts to turn, right, what's going to happen to all these pretty charts? All right, and CVX, is it an index component? It is. So if the market falls, does it need to fall? It does. All right, okay, now, so I wouldn't want to do that. It doesn't benefit me. The odds are against me, right? If I sell a put option just for cash flow, it doesn't make sense. All right, so every trade that I take right now has to fulfill, right, good reasoning and good thoughts. All right, if I'm not happy with it, if I feel that there's a risk behind it, no, then I'm not happy. Yeah, okay, so yeah, look, even if you sell what, $170 put option, do you really feel comfortable holding CVX at $170? All right, why? Because if you just look back, did you realize it could fall to below 100? Right, that means if you get in over here, look at this. You're getting in near the high. You really want to trade a stock here? No, I'm sure you don't. Yeah, okay, all right. So always have your reasonings, always have your thoughts, okay, ladies and gentlemen? All right, now, so I'll bring this session to a close over here. All right, thank you very much, ladies and gentlemen, for joining me once again. All right, and for those of you who joined me late, all right, you would have realized, all right, I'm more than happy to answer questions that participants have put out today. All right, so if you enjoyed the learning process, remember, don't stinge on hitting the like button. It doesn't cost you anything. Yeah, okay, so just hit the like button over here, all right, and also hit the share button so that we can reach out to as many people as possible, all right, okay, amidst this very, very difficult year, all right, for many people who are trading the markets, all right. So if you can do that for me, all right, okay, please do so, yeah. All right, so this is Terence. I'm Possible Terence over here, all right, signing off for this week, all right. I will see you next week again, and hopefully, all right, I can find that one more trade that's going to bring us over $2,000 for the month of February. Okay, thank you very much, ladies and gentlemen. All right, I'll leave you back to celebrate the remaining days of Chinese New Year. All right, we are, if I'm not wrong, in day 6 today. All right, there's still another 9 more days before Chinese New Year comes to a close. All right, so there's many, many more parties that you have to attend to. All right, do take care of your health. all right, and have enough rest. All right, this is Terence signing off. I'll see all of you next Friday. Bye bye for now. See you soon.